Hello, traders. It is Monday, the 15th of December, 2018. It's 8:01 a.m. Chicago time. Good morning, good afternoon, good evening to you all. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market's allocating mixed. Gold is strong this morning, up 0.92%, up $11.10, followed by crude oil up 52 cents. The DAX Euro stocks are strong today, up 0.74% and 0.59. The laggards, with gold being at the top, the dollar's at the bottom. The dollar's down 25.5 cents or 0.27%. The indices are off. The S&P is off only 1.5, but the NASDAQ is off about 12 points, which isn't much. It's about 16 basis points. So overall, I would say that the action overnight in the extended hours since yesterday's open was mostly a dip down in a market that has mostly recovered its losses in the indices. So that's where we stand this morning. As far as what we're looking for today, or actually for the week, since it's Monday, this week has releases distributed throughout. Nothing big today. We're pretty much done with releases for today. We have business inventories at 10 a.m. Eastern for August, but August, and then tomorrow we have it's actually tonight really. China's PMI, CPI year on year. That's the prelim. That's likely to move the market around a little bit. And then we get employment numbers out of the UK, the ZOO number out of Germany, industrial production, cap utilization tomorrow in the U.S. Very low importance numbers tomorrow in the U.S. session. Wednesday, we got housing starts, building permits. We also get CPI from Europe and the UK. We get crude oil inventories and a lot of central bank speakers on Wednesday. And then Thursday, we have UK retail sales. U.S., we have several numbers. Philly Fed claims, the leading index prelim, which is likely to be a mover. And we have more central bank speakers. We top off the week with Friday, Thursday night, really, U.S. time, but Friday, GDP from China, likely to be a mover, Q on Q and year on year. And then we get U.S. existing home sales, more central bank speakers. So the week generally has got events distributed throughout. We just came off of a very volatile week. We haven't seen such volatility since the beginning of February, with Friday on the S&P being an inside day. An inside day that pretty much mimics the overnight session. The overnight session mimics Friday's action. So let's flip into our review. Here's what was expected on Friday. The main idea is the market's likely to dip down. Why is this pink? The main idea here is the market's likely to dip down. The expectation is it would likely dip down into the 2760 or so, consolidate, and then push out and challenge that high, that weakish high we had on Thursday. That did not happen. Scenario 2 did not happen either. Here's what actually took place. Oof, noisy, even on a 4-tick. So you can see a pretty choppy open that extends itself down, and then really pretty noisy right in here. Pretty noisy, and then it starts to flow a little bit better. We tackle the the close of the prior day. We were stuck here in the morning against this point of control, the prior day's point of control, but the profile from Thursday is pretty elongated. We ended up pushing right into that high volume node in the lower distribution before popping back up to the beautiful mid trade right there, right on the money, and then attempts to make a lower low is unable, and then we rally into the close. We almost take out or put in a double top. We almost push. If my assertion is, or my expectation was that we would actually go neutral on the day, meaning we broke the IB low right here, and we may break the IB high into the close, which might give us a neutral extreme close, but the market ran out of time. It pulled up just a tick below, or a couple ticks, I think, below the IB high, giving us somewhat of a weak high in the ensuing sessions. And we ended up closing right on top of the point of control of the day, a clear low volume node right at the IB. At the IB low at 2760, paying attention to that. There's a stock zone there. And then the overnight session carried us down and then back up. So here's what the overnight session looked like. So we open up and we immediately push lower, back up to the open, and then we're basically sideways well into the European Open, which is around here. And we dip down into 45 and then back up, and we are back to where we were. Basically came right back to the Friday close. And so that's where we stand here. We kind of had a test lower and we're finishing higher. The volume on the overnight is relatively high, relatively meaningful, and overall a very boxy kind of profile, almost a double distribution profile. But look at this value area is just very boxy, right? And so we are stuck here at 2765. On Friday we opened up at 2776, I think, and a quarter. We really recovered really well on Friday from the selling, and then have done so in the overnight session as well. The heat map looks quite busy overnight. So here we open and we see right away big size hit all the way through, like very strong selling right on the open that recovers back up, and then we end up pushing lower into what looks like a liquidity pool down here at the 2745 area, and then we pop right up from there. And so here's the bond market open, and we've been sideways since. So really not much to glean. The conclusion is not much to glean from the overnight session other than the fact that we completed a pretty clean test lower and have pushed higher and are flagging now, which gives us a strong potential for an attempt higher. Now, the overall stance of the market is, of course, bearish currently. So as we look at what it has done over the last week, here's how things kind of play out. I have a 200 simple moving average here at 2775.50 on the futures on a rolled price basis, and we are we pushed through and we closed underneath it Thursday, Friday, and we pushed into that MC point of control that I talked about last week. So let's enlarge this. So this is where we are in a big picture. We came right back to this point of control and have retested it on Friday and are holding higher. I'm still not seeing clear signs of selling being done, but it certainly chiseled out a pretty good excess low on Thursday, and it's holding that low on Friday. Okay, and so what this is doing is it's kind of a bear flag right now, like boom, and then consolidating potentially here. Again, Friday was an inside day, pretty good volume, but overall, just the non-price action, the volume-based, auction-based read, is that we are back at the most traded, most valuable section since of the year. These prices are the most accepted prices of the year. The cutoff point for that is up in the 51, 52 area from the top, and from below it is all the way down to 2,700. We tagged 2,900 last week before we dropped off, and we ended up putting in a bottom. I forget where it was, 2712-ish or something like that. And we are here in between. So I still see a good chance that this is likely to walk back up to 2,800. 2,800 on a first test is going to be an important area for me to sell on a first test. So I'm going to look for that if the market starts to drift up. But currently, the action is such that we are not. It's not very clear where we're headed, other than the fact that we are pausing and resting. And that's what we did on Friday. So we sold off. Let's kill these stock zones. So we sold off, and you can see that it's decelerated. The speed decelerated. And now we are in this consolidation kind of phase right here. Okay, and so we'll see what happens today. I don't have an advantage, a scenario with a clear advantage this morning, given the action that we've done. I have to go with the latest information, which is that we tested lower, and then we ended up pushing back up. And so let me see where my sigma levels are. So 28.22, 27.95 up, and 27.15 below. So 27.12 was the low. The key scenario. Key scenario this morning, an open auction that tests lower. I'm looking for it to consolidate here at the 27.60 and push back into the 27.50 area. Consolidate. I'm looking for an impulse higher again, same as Friday. Looking for an impulse higher that pushes the overnight high and retests this 27.80 high. It is Monday, so the volatility is not expected to be really all that great. But with the market pushing 27.50, I'm looking for about 27.80 to be the top for a 30-point range in the current extended volatility. So a dip down does not mean, unless it's an open drive or an open test up drive down, a dip down does not mean I'm off the longs. I'm going to be looking for longs anyway. The secondary scenario is a market that just drops right off, pulls back, and then gets us an impulse down, and then we're looking for this low to be retested, 27.32, and then for it to start to make its way, the selling to make its way down into this 27.12 down into 2,700 from the top. This is selling resuming basically. Not so likely. Scenarios 3 and 4 really are open, test down, push up, drive up, and the target for that's 2,800. Let me put that on here just so we have it documented. So open, test, drive up, consolidate, push to the next area, and then looking for 2,800 to hold on the first test. There's no guarantee there. Okay, so this is a scenario where we pull back and then aggressive buyers step in and we start to push these stops and force some of the longer term shorts to cover a little bit. And then scenario 4 is an open pushes up to the point of control and then impulses down and starts to drift down. Really, it's about, I'm going to tell you honestly, I can come up with all the scenarios I want, but in this environment, the trade is much more emotional. There are people who have taken bets who may not be so confident. There are people who have lost money who are itching to make money back. A lot of the trade is going to be emotional. And so I can put up as many scenarios as I want, but I'm going to be very frank with you in saying that I'm going to be leaning on the order flow very heavily in the current trading as I did last week. Last week, you saw how it melted right through stock zones, all the short-term levels, all that stuff. The market couldn't care less about a stock zone or a prior high or low or some volume profile level when it's in the mood that it's in last week, because it's very emotionally charged. It's very emotionally driven. It's very panicky. People have to get into futures to hedge positions or to hedge positions in equities or in options or whatever. And it tends to kind of overshoot in either direction. The VIX went up to 28 and has dropped off a little bit, and it's likely to continue to drop off into this week. But overall, it's an emotional trade. So for me, although I can see what the ranges might be, I can see what the struggle areas might be, and that's what I'm drawing on here. If we get an impulse in X direction, I expect it to struggle here before the continuation and so on. I'm really relying on how the market's rotating and how the order flow is being treated for my trades. I just have to switch to that mode when the market's in a frenzy like this. And these are, I know it's not the best for many people, and many people have lost money, but these are my favorite times. This high volatility is my bread and butter for the bulk of the year. So it's a good time. The bottom line is you can do scenarios, you can throw your lines on your chart, do whatever, fibs, whatever. But ultimately understand that in a high volatility environment, it is much more emotional trade than it is a logical one. The most important thing we have to determine or try to determine is who is likely to be in control. How much strength do they have in the market? And the action based on Friday and the overnight don't give us a clear indication of that. And that's why you have this mess of scenarios here. Anyway, you still have to do your homework. Good luck today, and I'll catch you tomorrow. Take care.